And we're recording. Yay. Okay, let's get started here. Before I do that, I wanted to bring up. There's the picture. Asalius, or whatever his name is, the hurricane. Because it's a male, it's a hurricane instead of a hurricane. It's a she. Just off the coast. Happens to us maybe once a year. They'll come up through the Gulf Coast. Sorry, the Gulf Stream, the Atlantic coast. And they end up doing is just coming up here over the Bahamas and then scooting around. And they pretty much miss us. We get some rain, we get some wind, but nothing to worry about. I saw that one coming, but you always have to be prepared for occasionally you'll get one that'll just veer off enough to the side that'll hit us. But this one was pretty benign this year. Okay, let's get back. Disclaimer. Hey, bottom line right here is trading involves risk of loss of capital. Make sure that it's money that you can afford to lose and that you do your due diligence about making sure you know what you're doing. You practiced it with paper money before, and nothing you hear tonight will be considered recommendations or advice. For those who are new, I'm an ex-U.S. Air Force fighter pilot with master's degrees in both computers and business, active trader since '98, full-time since '09, and a technical trader, but I do use... let me put this on Do Not Disturb. Okay. Yeah, I can give the... Oh, whoops. Stochastics 7,7,3,3. And that's the best I can do for the moment. Stick around to the end of the presentation. We've got a special offer for those who are not members of the room or do not have the LTA scanner. What we're going to do is we're going to go over, I know we did it about 3 weeks ago, the trading earnings, so I'm going to do an abbreviated session of that because I think it's really important because we're heavy into the middle of earnings season at the moment, and that seems to be the stocks that are moving one way or the other. We'll talk about identifying the best trades. We'll go over the economic and earnings calendars, market overview, some trade ideas that I can see out there. They're a little bit slim pickings, but there's always a few. Q&A that's not stock specific, and then a look at your stocks, only one if time permits. All right, less than a week trading earnings. Earnings is a reason for a stock to gap. We'll talk about why. We'll talk about some types of gaps and considerations, trading plan, and a few examples. Well, primarily earnings, and more earnings is the reason that I watch, and I love earnings. I know that Rick Sadler and others don't like it because it messes up their swing trades. And I agree with that. There's sometimes I have to pass on a stock that looks good, but earnings are too close. So I can hear that. But if we use earnings as an impetus for, along with the chart pattern and setup, we can take advantage of that and make some nice profits. The reaction to earnings, and we had a colleague who was a member of the room here for quite some time, is no longer with us. He always said it's not about the numbers, it's about how the stock reacts to the number. It's the reaction, it's the price action. So keep an eye on price action. Gaps up and down are usually the beginning of a major move, or can often be, and they can be very profitable in both the short term and the long term. Most people are thinking that to take advantage of earnings, you've got to be either a very, very long-term investor or you have to be a short-term day trader. I'll show you again, how I can do that on a swing trade basis. We could all do that. All right, some things to consider are not all gaps are going to work. So a lot of people like to say that up gaps are good shorts because they think it's going to come back, and down gaps are good longs because it's going to come revert back to the mean. Sometimes that's true, but not always. You have to look at the setup. Let's go back up to not all gaps will work, and we need to determine before we enter some sort of trade what pattern would prove to us that we're wrong in our assessment. So if we're going long, what kind of pullback or set of pullbacks would we not want to see? And then when we see it, we know it's time to exit stage right. I'll also say that not all gaps are filled, at least in the near term. And a gap is in the opposite direction of a price movement or above or below a support or resistance consolidation level. Those are very, very key. They create a shock, and we can take advantage of that. Again, I talked about support and resistance. We're going to cover a few of those. I'm going to skip on down here to high short interest. And high short interest, I use float. You can find float on, let's see, whoops. Float. Where are you? Okay, well, I can't find it at the moment. You can go to FinViz and find it there, or you can go to shortsqueeze.com. Oops, wrong one. Oh, there it is. FinViz. I've done a search here. You do it on an individual stock. Go to ownership and sort on the float short. Anything over about 10% ish would add fuel to the fire, and I look for those. High short interest. Again, here's where we got it. FinViz, short squeeze. I forgot I had this slide in here. High is relative, about 10%. Anything over 8 I'll watch. Effective gap on stock price. I'll skip over that one at the moment. There's really, people who are short are going to look to cover. People who are long and the gap's down, they're going to get, oh my God. So at some point, these people are going to have to do something. And have a plan. Have the same idea as any trade. You enter and exit. If you have a good entry, you have a good profit potential. However, especially on earnings gaps, if you have a bad entry, a trap, and get fooled into buying at the wrong spot, the losses can get quite large in a hurry. And manage the risk. Don't take on too much risk because we're talking about higher volatility. So if you normally take 400 shares or 600 shares or 2 contracts or 4 contracts, you may want to cut it in half or reduce it. All right, the way I identify the best gapping trades or any trade is I scan an earnings list or any other list that I've done. Usually the night before, I'll create a list and refine my list. I will not trade and suggest that no one trade in the pre or post market because of volatility and lack of liquidity. Wild swings during conference calls, and I hate it when people have those during the middle of the day and not before market hours. And most of the big trades are done during regular hours. Use 5-minute opening range, and we'll talk about that, to help keep us on the correct side of the trade. I don't attempt to predict earnings, which means that I don't get in ahead of earnings, and I only trade to sell in after hours or the pre-market. As Rick says, a lot of times gaps are gift, especially if they're not earnings related and they're not related to the bottom line. It can expose you to rapid reversals due to unexpected data coming out or somebody saying something, and limited access to markets, which we talked about. I copied my earnings list to the LTA scanner and to a master universe list. I have the LTA scanner look and identify the pre-market gappers as well, going to my broker, and I analyze any of those for possible trades that I like. Okay, here we go. LTA scanner out there, probably one of the best tools that I've ever come across. Used to have $250 to $300 that Rick Sadler and I used to pay for a scanner that was far less capable and not nearly as customizable as this one. Ed is a really good guy. He'll step you through the paces and help you in any way, shape, or form. If you don't have, if they don't have a setup that you like, he will work with you to try to come up with one that fits your needs. Every Wednesday at 2 p.m. At this location here. They cancel. Come on, baby. Anyway. Okay. Just wanting to take that. I'm trying to copy it. Which set and the LTA is a scanner. Well, it's the same as. Oh, thanks, Ed. Reggie, it's the J hook. My favorite pattern on anything is a J hook pattern, and the J hook pattern is basically a move up followed by a pullback and then a curl back up, and it's at that curl back up I look for a buy signal and then set my stop just below the curl up, and my first target is that level right there at the prior swing, so I take stuff off the table there, and I'm looking for a potential breakout. Now I have it set up and there are already pre-canned settings there, morning stars, just about any chart pattern. What's your favorite pattern, Reggie? How many trading days is the J hook? Well, that really depends, Lauren. Let's see. Right. Oh, that will be yours. But I think maybe she's asking me what my setup is here. Right in here, I want something like 3 to 5 days move up, anywhere from 2 to 4 days on the pullback. And it needs to be far less than the move up. So that's really no problem. That I'm only guessing that's what she was asking. So the pop out of the box, hey, you're in luck. I've got I'm going to show the pop out of the box pattern right here in the LTA scanner in just a little bit. It'll alert you of those. Let's go. Let's keep going here in the presentation. 5-minute opening range. Deer gapped up back in May, and it did nothing but basically go south after that, and did 100% retracement of the gap up. So if you had used the 5-minute opening range and said that I'm not going to go long until it breaks this opening range here, or if it comes back, I'll do it. It never did, and you stayed out of a losing trade. Gap and crap. Here's Lowe's. Lowe's gapped up. People jumped on board, but it gapped up to resistance. That's what I was talking to you guys about a little earlier. When it gaps up, look to the left. See over here if you've got any resistance. Then make it break that level before you go long. Lowe's, the 5 minutes, we already talked about the gap and crap there. Gap and snap. McKesson, gap down at the open and then pull back up. I believe this might have been one that had the conference call right about in here, and they started talking about the numbers. And here you can see Lauren. You see how the move, even though this is on a 5-minute chart, it's the same pattern. Let me get this going here. We had a move up of several candles, and a move back, several candles, but the move here, the pullback, was 50% or less of the move up, and then it kind of went sideways for a while and then started to break up. This right here is my J-hook. Move up, pull back, move up higher. And my first target was just under about 151 and a half. All right, back to the daily on Genworth. Many times the gap is down to a support level. I'm not sure that this is a long, but it would keep you from going short at that gap because you looked at the resistance and said, I'm going to make it break lower than that. Now, the fact you're probably not going to go short on a $3 stop. Maybe you will. I tend not to trade short stocks that are less than about 20 bucks. TEN, signal big move. Here we were talking about, we had a gap up and move up on, I think this was about the 6th or the 7th of September last year. It moved above prior swing levels, and I had it marked. Kaboom. I let it go for that first day into the second day, and there it proved on about the 8th that it wanted to break out. And it moves up about 3 to 5 days. So 1, 2, 3, 4, 5, 6. It really crapped out at 7, but the real big part of the meat of the move was about 5 days. And here's some recent 45-degree runners. Zillow gapped up and crapped out, but then afterwards, it started to go higher. It basically resumed the climb that it had before. And you'll have to decide whether this is something that you will look at. You may want to drill down to an hourly chart, and you can see maybe a pattern developing that you like. Maybe in this area right in here, if you went down to a 60-minute chart, it would be going and doing a bowl like this and said, wait a minute, the previous 60 minutes were rising up. This looks a lot like a J-hook on a 60-minute chart. Although this one was a gap, well, I fill it in my mind. And then I can go long, maybe there with a really tight stop. Looking for it to go back up here and it retest, because there were buyers here. At one point, there were buyers here at this $38, $39 level. They'll probably want to go back up there and retest it at a minimum. At least that's the plan. All right, Zillow earlier in 2019 did a gap down. It gapped down below the support level and continued lower for about 1, 2, 3, 4, 5, 6 days, so 5 more days after the gap down. A lot of people will say, well, it gapped down, it's too late to get in. Well, these are proving that it isn't always too late to get in. At least I hope you're seeing that. Twillo, gap above the support level. Boom. It gapped from, 105, 110 to 150 and then moved up to 170 in a day? There's no way I'm going to get in that, right? Well, it all depends on whether you can get a good tight enough stop that you could stand what it's going to take. Now, it's all about reward and risk. If you can stand the risk, you might get the reward. But you have to decide whether you can stand that risk. And in this case right here is one that you would want to go with probably far fewer shares or contracts that you would do otherwise. And you also need to evaluate. The reason I say that I use some limited fundamentals, if this is on earnings and they have what are all the analysts or whatever say this is blowout earnings, I might give it some credence and whatever. And it's obvious that the traders are reacting to it. Also, did this have high short interest? I believe this actually had short interest in the 11 to 12% level back in May. So therefore, that gave the extra fuel for it to continue to go higher. There's the 5-minute chart, the same gap up. There's 10 on the gap up. I guess I've got to repeat there on a couple of slides. I apologize. SRPT, gap up off of a little bit of a doji / hammer, move up above the swing levels here. Maybe I'll call that resistance. And you could either go long on day one or wait for day two and see if it's got to follow through. And you could still make money. Square, same thing. Go long. I've drawn the green line from the top of day one, which is a day two entry. 1, 2, 3 days, maybe 4. You could go long and not wait for day two to happen if you go long on the break above that resistance level. SFM, break above resistance move for 4 days. Ring, gap up, kind of held its own. Probably would not have gone long on day one. Would wait for it to break above the high. Remember the 5-minute opening range where we wanted to make it break above the high? You do the same for here on the daily chart. Apple. You're going to find Apple's going to be one of my trade recommendations here. Axion. Now this one, it gapped up to resistance. We're talking a big gap from the 50s to the mid 60s. It took a while for it to consolidate and to break through the sellers here, but it finally did. So basically this is it's like a big move up here. And sideways movement, slight pullback, and then the explosion. So this is a continuation move. First move up, second move sideways, slight pullback, third move, a continuation move. Okay. AAXN gapped up and ran up to the prior resistance levels and then failed to continue higher. And what else helped me judge this one? Stochastics RSI started to roll over on the daily chart. I hope you get the idea that just because the stock gaps up, watch and see where support and resistance are. Look at short interest and just look at the overall patterns. This also applies to intraday runners. Again, this one is BIP. The conference call happened midday. Boo, don't like that. But it went sideways after the gap up and then started to move as they started to talk. And we have another little J-hook back here. This is again on a 15-minute chart. 15-minute chart here. BGS. Move up a little bit on earnings, and then I believe it had a conference call right here, and then it shot up, did the pullback, and then moved back up higher later in the day. Zillow, gap up, sideways, move up. If these happen, they're all over the place. All right, if you want to sign up for the LTA scanner, whoops, not that one. It's going to be here. LTA scanner. Okay, remember what I told you, Reggie, I'd be talking to you about? There's a pop-up out of the box. Rick had a post of the LTA scanner identifying it for him. Go in and talk to Ed on a Wednesday or even any time during the trading hours, Monday through Friday, regular trading hours, and he should be able to help you out. Okay, hold on. Right here. Let me get... Hey, Coach, how's it going? I wouldn't mind if you do decide to look at it, use that link to go look at the LTA scanner, and then if you sign up, please also use that or my other link, which is direct purchase. If you decide to purchase, I get a small contribution if you happen to do that. But I wouldn't recommend anything that I didn't believe in. Trust me. Trust me. $147 a month, about half of what I used to pay. Okay. I want to ask now if anybody has any questions on this trading earnings or anything I've said up to now. We're not looking about individual stocks. We're not looking. I won't answer any of those. All right. I'm going to keep an eye on if there are any questions that pop up. But economic reports, the big one that jumps out at me really is on Friday, where we have the monthly jobs data. But in here we have manufacturing data. Remember, GDP was down. If we see something that refutes that or somewhat, then we might be able to, like factory orders, vehicle sales, construction, and manufacturing. All of those are important. Okay, there's the anticipated earnings from Earnings Whisper. That's all you're going to get for earnings this week for me, because we're talking 150 to 190 stocks reporting per day. It's just almost too hard for me to follow more than one day at a time. I'd be here for a few hours putting it together for the whole week. All right. Market overview. Let's go in there. I think I could go down and then go there. All right. I like to cover oil first, and I'm going to have to go to a 9-month chart for oil here. What we've done is we've done a retracement of about 2/3 of this dip from the 50s down to 10 and then back up to 40. I think it's just a lot of just grinding higher. I don't see a good swing trade in oil. I have never been a swing trader in oil. I've always been a day trader in oil. So you can decide how you want to trade it, but pretty much that's how I do things there. As far as gold's been on a tear, and I bet you Coach is going to say something about that. But in the last month or so, when we broke out about 1815, 1825, that was a level. I can't get there from here. Well, there was a level over here about 18 and a quarter or so that we got up to. It paused for a little bit. That was a breakout level. Yeah, I've been there before. I missed this move. All right, let's go over to the S&P 500. Now this is a 3-month chart. We had kind of a dented bowl here. I'm seeing that we have. Let me change the color here of my tool. Green. Right in here, I'm seeing as the bowl or cup. We have the dent in the middle. But this right here is the handle. And I pointed that out a couple of weeks ago. I said that we might have been trying to form the cup and the handle over here. But a lot of people are negative on the markets because they're letting the news influence how they see things. Well, don't do that. Take off the rose-colored glasses, take off the brown glasses. Just put on regular glasses or none and look at the charts. These charts are telling us that we're still going higher. How much short interest is too high on earnings? Not too high. If you're going long, there's nothing that's too high, Joe. If you're going to try to go short, I would look and see how much short interest there is already. And if you've got a very high number in the 20s or so, and then it gaps down and starts running, that might be a crowded trade, and you'll have to decide. I normally don't jump into stocks to the short side that gap down that have more than about 15 to 20%. Above that, I'm not going to look at it because my odds start to go way down. We could get a short-term rally against me without any difficulty whatsoever. So if you're looking to go short, that's when I'd worry about how much short interest is too high. But to the long side, really, the more the better. It's more gasoline on that fire. All right, let's get rid of that. Let's go on over to the Dow. The Dow is lagging the S&P. Now, the Dow is only 30 stocks. The S&P is 500. The S&P 500 is mostly multinational. So are the Dow stocks, but I don't like to watch the Dow so much. So we have a slight disconnect between the two. I give preference to the S&P 500 because, one, we have 500 stocks instead of 30, and that's primarily the main reason, because it'll give us a broader depth. Now, the one problem we have when we get to the other parts of the market, here's the NASDAQ, the NQ, the NASDAQ 100. Again, it's only the top 100 NASDAQ. Hey, doll, how's it going? And it's been, one of our best movers for this last, 6 months or so? We're talking March onwards. We've resumed the climb. Now, I can't tell you exactly why, but one thing I can also tell you is that not all of the NASDAQ 100 look like this. The higher cap stocks look better than the lower cap NASDAQ 100 stocks, and look better than the Russell. Now the Russell, let's go over here to a 6-month chart. The Russell is kind of flat here, and it's been one of the laggards for most of this. And I'm going to I'm going to hypothesize that the reason that it's lagging is because it has mostly U.S.-based stocks, or stocks that have markets in the U.S. So therefore, they're going to lag because we're still in this pandemic. So multinationals can really sell to where they're having less problems at the moment. All right. The other thing I look at is the VIX. VIX is still kind of low. The VIX is really showing not a lot of fear. It's elevated over the last 20 years, average of about 18 to 20, but not the 60 to 80 that we had back in March. That was just overdone. All right, let's go back to the presentation. All right, trade ideas. I'm going to jump over to TC2000. And the first thing I want to do is show you the T2122. That's the 4-week new high, new low ratio. What it is showing is that the blue line here is the S&P 500 or SPX, the cash. And the green dash line, that's where we are in percentage of stocks when you take the number of 4-week new highs divided by the 4-week new lows. That's monthly highs and monthly lows. We're looking at about 60%. So even though we're making basically new highs, it's really on less fewer and fewer stocks. Now, here's the deal. This is where I judge breadth and how we're doing. If we're starting to make really new highs, but we're down here around the 50 or 60 percentile, that means most of the stocks are lagging. Now, here we're getting to new highs, new highs, new highs, in the 90 percentile range. And that's actually quite bullish. That means most of the 500 stocks are making monthly highs here. Over 4 or 5 to 1. Now, when we get above 85 or not, and to 95, my 20 years of looking at this has told me we're due for some sort of pullback. Well, it does pull back in the numbers, but here we just kind of grinded higher. It doesn't tell you how deep the pullback's going to be or how long it's going to last. And sometimes the average kind of defies logic in that you've got the leaders taking you up. So you have to learn how to read this. When it gets down in below 20, somewhere near zero, as it did back here in March, it's got nowhere to go but up. Well, over time. So you've got to be cognizant of the fact that when we get down in here, we're probably going to get to a bounce. I'm going to tell you, my experience says the bounces are more reliable than the pullbacks. But we'll get rotation inside here, and we'll get rotation to the leadership groups. And that's kind of what we've been having going on for the last little while. Okay. Let's look here. My first one is Apple. Apple reported earnings Thursday night, along with a stock split, which means absolutely nothing, but people get excited about it. It does keep the stock at a reasonable dollar amount that average Joe consumer investor can buy it at $100, so that's what they're going to go. This has the possibility of doing a 45-degree runner. AJG, again, the same thing, except if I go to the weekly, I look back here and I see a resistance. It got up to the 110 level. So the trade here would be, you'd maybe want to see a consolidation, hold high and tight, and a break above this level. All right, so what you not want to do is have it pull back or go sideways and then break out. Berry Plastics. Again, nice breakout on Friday. Unfortunately, it went up to the $55 level. That's where we have resistance here from back in August of last year. So, same thing. Going to make it form some sort of pattern. Maybe. Some sort of box there or another. Whoops. It won't let me draw it there. Okay, and then followed by the move up. There's our J hook. Brooks Automation, all-time highs, has no resistance. So all we have to do is watch. I'd love to see a pullback, maybe on an hourly chart, pull back to about the midway point and then do a J hook on the 60-minute. But if it breaks out above 55 or so, I wouldn't hesitate to go long. Capitola Gas, not ready yet, but over about 1915 to 1925, or maybe 1950. It could be a long. I know oil and gas. Don't let your emotions and logic take over. Follow the chart. This looks pretty decent. I wouldn't put all my eggs in that basket, though. EBS, break above resistance. Look for a potential 45-degree runner. Etsy, we had pops out of the box over here, but then over here it failed. Did not do it. And it did kind of a W pattern and broke up. Now, it's already up 1, 2, 3 days. How many days would I expect this to go up? Probably no more than 2 or 3 more, unless the market starts to get really goosey. Hartford Financial, break above this $43 level. I could see us going up here to 47. Let's go ahead and mark that one. I can see us going anywhere to in that area. Notice I will be to the bottom side, but that's good enough to trade for me. MetaX, 12% of the float short. I'm going to go and show you the weekly. The reason it pulled back was probably this level here around 9 or 10, and the swing level is about $11.25. Look at a 60-minute chart. Let's even look at a 30-minute chart so I can get some. It gapped up on earnings, pretty much went sideways. This right here was a very. This could either be a bad tick, or it could just have been. Let's see what happened on a 5-minute chart. No, it was probably real, but that move up to 1050 on volume, it probably wants to get retested. And I would watch maybe a 15-minute chart or a 60-minute chart, something like that. And if it breaks over about this 930 level, it's still back on for the trade for me. Pins gapped up. Gapped up to where? Unfortunately, well, it gapped up where? It gapped up, pulled back, according to this. Let's see on a 5-minute. Actually, it wasn't during market hours that it pulled back. This was all the swing and wild swings. Let's look at it. Remember I told you not to trade in after hours? Pins reported. It went zoomed way up. And then at the 8 o'clock hour pre-market, we had wild swings in here. If you got in long at $30 or so, and then it went down to 27, that's 10%. Even the sturdiest and hardiest of people would probably have their heart pounding pretty hard if you saw that price come across the ticker. So wait till the opening and the stock open. Let's look at the 15. And most of it is trading right in there. Whoop, let's go to the weekly chart. And the reason it stopped at 34.50 was because of prior swing level. Make it break above 34.50 or pull back and do a nice sideways or pullback motion and a little J hook. And that way you could go. UPS was on my watch list back here. Remember what we said when we were talking about I love earnings, but sometimes I don't like earnings? Well, I saw UPS making a move here and wanted to go long. But I saw the resistance level and I knew earnings were coming, so I passed. Well, I dropped the ball and I didn't put it back on my radar scope. And during regular trading hours last week, on Friday, it was right here about 142. Yeah, it basically was already up too far on Thursday. On Friday would probably have been a nice time to enter. This could do a 30 to 45 degree runner, even though it's gapped up there. It's a very, very high cap stock, so you'll have to decide whether you believe it or not. All right, let's go over a few shorts. Now, I don't have as many. Disregard those that are listed here. Those made my first cut, but shorts just not looking as promising. Fluor, $10 stock. Hate to short them, but this looks like it's going to go to 8. It kind of wobbled along here and then moved down. Earnings, I believe, were last week, but I don't know when. We'll find out. Well, it says earnings are coming up. Okay. L. Go to L. Lowe's Insurance. Boom. Has broken the uptrend. Are you going to get a bounce on the 50 or a pause? I bet you do. It's not any reason for me to be wanting to try to play it long or whatever. But maybe if it breaks this 35 after pausing for a little bit or doing a little bit of a bounce. Let's say that it moves up like that. And then starts down. You could potentially go short then. Mohawk. This is a classic short. A fall down to a prior level, which was a swing level. Let me grab that. It bounced off that support. And now that would be my target for it to go to and potentially break through. It could go down there and do a double bottom, but from 79 to 70, 71, I'll call it 80 to 71, $8. I'll take that trade. You just got to be able to get in with a good reward to risk. Don't overpay. Court. I'd love to see a bounce up and out 1550, but I think it's going to 1385. Shake Shack. If it breaks this level here, again 48 and a quarter or so, you've got 45 something, and you basically have any of these levels down here in play. But it looks like you could potentially get a break. Now, I'd love to see a bounce, maybe back up towards 50, and then give us a better entry. But right now, it does look like it wants to go lower. All about reward to risk. The final short I've got is GT. Again, probably going to want a pause or a slight bounce at the 50. I think it's probably going to happen, but it wants $8. Mohawk earnings on 8.6. Yeah, it's all covered up on this thing. There's a bug in the highlighter for TC2000, the beta that I'm using. Thank you. MHK. That says 7:31 on the conference call, which was last Friday. So why are they having earnings in a conference call again? This conference call may have been an error, and that's what I was using it for. I grabbed it, but it did move down. But thanks very much, Richard. That's a very good example as to why it's great not to trade alone, but to trade with others. Because if I'd said, hey, this is a fantastic classic short, and Richard jumps in and said, hey, wait a minute, and then we go back and we find out when Mohawk's earnings, we could even go, I've gone so far as to call investor relations and say, when is your next earnings? And they told me when it's scheduled for. And can you go with the short float? Okay. All right. Remember when I was calling about MetaRx, MDRX, and said that it had high float short? Let's go to MDRX here. And it gapped up. And it shows we have somewhere around 12% of the float short. To me, that means that we have people were probably expecting the stock to continue in this level, the people who are short. That's my guess. Or they were expecting it to go no higher than about 9. If you look at the swing level right here. Let's mark that one up. They have to have some sort of stop in place. Institutions are not going to go short and stay short forever. So if we break that level, which is what I talked about earlier, who would be interested in buying this to the long side? Well, the people who are already in the stock from here, they might sell some, but most of the people are going to hang on, and they're going to say, I want more profit. They get greedy. The people who weren't in or waiting for the consolidation breakout, they're interested in buying. And the people who are short are going, oh my God, I'm already down, $250,000 in this short position, and pretty soon the boss is beating their shoulder saying, how you doing with that MDRX? You going to get out of it yet? So that's the way I see it. These guys are going to be motivated buyers, even though they are just buying to cover their shorts. Now, that's the long side. To the short side, if we had something, let's see. All right, let's say that we're in FLIR and we were already short, and it has 20%, 25% short interest. Court, same thing if it already has high short interest. Shack, maybe, it's right there. Do you really want to go into a crowded trade if it already has 20% of the float short? That's an awful lot. I mean, anything over about 10 or 15 is really starting to get high. But then you could get high short interest in things like JCPenney's that go out of business. I mean, you got to figure out what's too much for you. To the short side, it's hard for me to decide or to actually be definitive. I've already decided anything over about 15 to 20, I'm not doing it. Now, if you're talking about the long side, I've already decided anywhere around 10% or more, it gives me positive juice to go higher. Okay, I hope that helps. All right, I did say that if you stuck around to the end that we would have an opportunity for those who are not members of the Hit Run Candlesticks or Right Way Options. You can get in on a 2-month trial for $49, less than $1 a day. Let's go here. Let's go there. Let's go there. You're welcome, HJ. And there we go. You can sign up. And trust me, you're going to get your $49 back if you come into the room, if nothing more than just learning what to do. I would strongly suggest that if you're not being successful at the moment, doing it your way, come in, do not take any of the trades, but to watch for the first 2 weeks at least. Don't jump in and follow the trades. The number one thing that I would tell anyone is do not be a follower. No, we don't want lemmings. We want to teach you how to think for yourself and trade for yourself. So you have to know what your entry level, what your risk level, what your stop level, what your targets before you enter. If you don't know those, don't follow someone in the trade. If Rick takes a trade out there, or Doug, or anybody out there, Ed, I'll look at it and in my own merits, I'll say, I don't like that one, or hey, I do like that one, and here's where my stop and whatever would be. That's what I do. I'll do a checklist for the trades. Okay, Ricardo, all right. How do I let's go over the longs. I lean more to the longs at the moment. All right, Apple. Stochastics RSI is coming up from the bottom. It still has a few days left in it, in my view. AJG, Arthur J. Gallagher, it's probably got 4 or 5 days left in it. But as this is a momentum judge. Barry, it's just coming off towards the bottom. If it can continue to go higher, this will continue to go up. Otherwise, it'll continue to wallow sideways. Brooks Automation. Cabot Oil and Gas, coming up from the bottom. So if I see them coming in below 30 and closer to 20 to 25 and then curling back up, they will curl up only because of one reason. Price is going up. And it's telling you that the momentum is changing from down to up. Let's go back and look at Etsy back over here. The Etsy Betsy Spider back in here when it broke prior swing levels. Ooh, Stochastica was already at the top. Oh, it's overbought. Well, no, it isn't. Here's the problem. Stochastics RSI is artificially bound floor of 0, ceiling of 100. That number, if we let it go unbounded, could go up to 150, 175, whatever. The strongest of the strong will have these things pegged at the top. The time you want to look for it is when they curl over, when they get a crossover. Cross over here, look and see what's happening. Cross over here, look and see what's happening. Cross over here, what's happening? The breakout. Cross over here, what's happening? The plateau. It's going sideways here until about there, and then it starts to go up again. And then you get a little bit of false breakout, and then we get a move here to there. You've got to use it and look at it, and it takes a while to figure out how to use it. But I don't use this as a primary indicator, Ricardo. I only use it as a momentum judge, a way to judge momentum, and a way to confirm what I'm seeing up here on price. Good question, Reggie. Let me show you right here. All right. RSI period 7, stochastic 7, percent K 3, average type simple. Let me capture that for you. It's being uploaded, so why are you taking so long? Okay, there we go. Now that's the first 3. The second one is percent D, and it's just simple, period 3, no offset. Do you want me to capture that one too? Right, momentum change, Ricardo. All right, let me shift F11. Come on, baby. Oh, close. That's why it was open. The window. All right. Those are both of the criteria, and I use them. And go back, and what you need to probably look at is look at the stocks that did a breakout or a long pattern here, Ricardo. Those 2 uploads are number 1 and number 2. The first upload was the first 3 numbers, 773. The second one was percent D3. I thought you said okay, meaning you wanted to see both of them. Anyway, But go back and look, put these on your chart, see what it does for you, see what it tells you that stocks are going in the direction you expect them to do. All right. Okay. 1 second here. If you want to follow me here on Top Gun Trading on YouTube or StockTwits Top Gun Trading, I do post as many as I possibly can that are not extremely short-term trades, ones that I think have reasonable entries that people could still get in and they're not too late. A lot of times stuff that I'm in are very short-term, and a lot of times I'll trade futures intraday, and I'm definitely not going to post anything except the trade after the fact. And people will criticize me for saying, well, it's great that you trade this afterwards. You know, anybody could go back in 20/20 hindsight. I'm not doing that. All I'm trying to do is help you learn what the setups are that I would get in and get out. There are trolls everywhere. And YouTube, this is where I'll do the upload of the recording later tonight. And I also have quite a few recordings out there. I've got a lot of videos out there, and if you want to find out anything about stochastics RSI or trading earnings or whatever, just go over here to the Top Gun Trading room, go to the search, and type in earnings, or type in stochastics, or let's just type in RSI. And there you go. It says, oh, trading gaps with stochastics, Stoch RSIs, RSI. There's somewhere in one of those we're talking about stochastics RSI. And look at them, or earnings like we were saying. I'm talking about earnings in any one of these presentations. Okay, so that would give you a good idea. You can go to videos and look at the beginning. Look at the very beginning of every one of the presentations that I've got out here. They usually give you a pretty good idea of what the topic is. You'll see it in the agenda very early on. All right. Okay. I am going to open up for general questions, not stock specific. General questions only, please. I think people have probably answered them already. So let's go to individual stocks, one and only one, and don't repeat them later because I will remember, okay? I will remember. All right, Dahl wants to look at silver. What I'm going to do is I'm going to go here. See how far SLV is up here, Dahl? You know, I'm a little concerned that it's extended. It needs to pull back. However, stochastics RSI is telling me that it's gathering momentum. That would usually tell me that we're going lower. But in fact, it did go lower for about 3 to 4 days and then moved up on Friday. But it moved on Friday on lesser volume. So the momentum is not as strong as it was before. But this is actually, because price is holding up, it's telling me the next move could be pretty strong as well. You'll have to decide. One problem with this is, where do you put the stop? If you went long here, you may have to put the stop all the way down under 22. That would be my problem. Now, you didn't tell me whether you're already in it or not. If you're already in it, great going. Gold. Mr. R. Funk, you said long gold, but you didn't tell me whether you're already long gold or looking to go long. Same problem. If you get the breakout here over 186, where's your stop? If you're already in it, great going. Again, where's your stop? Have you taken any profits? My problem always with stuff that's extended is how far can it go? Eventually, it'll come back down. I would wait for the pullbacks or wait for a pause. Chart not showing. Are you guys showing my charts? I'm seeing them. Please don't send me a private message. Please don't see private message. I'm seeing the chart on gold and black. All right, let me try this. Do you see a chart in gold on black? I'm seeing it right here, looking over my shoulder at an independent thing. No. Okay, let me stop the webcast. Hold on a second. All right. Are you seeing the chart on gold now? All right. Now I got to go back up and find out where we were. All right. Thanks, guys. Sorry. Stella was looking at McDougall's. Now let's just go ahead and stay here. McDonald's is in a big trading range from a high of about 203, 205 to low about 180. Right now, we've got a little bit of a move up. Let's look at the EMA only chart. If you're trying to figure out whether this is an uptrend or downtrend for a stock, look at the 8 and the 17 exponential moving averages. Right here, they're basically forming a road, telling you it's going down. That one's saying short term it's going up. Flat pullback up. Right now we're going flat. And remember what I said about 205 and I said about 180? That's the range box we're in. And the moving averages are telling us. So wait till we get established in some sort of trend before you go long or short. And if you can't figure out what it is by looking at the chart here, what trend we're in, number one, you should probably not trade it. But if you insist on going deeper, go to the exponential moving averages and it'll become clear. All right? Thomas Long Abbott, I think he reported the other week. I think they reported back here a week or so ago. Abbott's one of this up one day, down the next or two. It's just one or two steps forward, one or two steps back. But if you could stand that volatility, it looks like it's going up. But right now we're on a downswing with a down candle. Maybe on the next one it'll go up. Maybe you might want to go to a 2-day chart or go to a 3-day chart or maybe even go to a weekly chart to figure out whether you want to get in. Abbott doesn't seem to move a lot. It moves $2.50, which is about 2.5% a day. But so that's maybe it's fooling me a little bit. Once we broke out of here above 95, we're on the move higher. and we're in an uptrend, look for the pullback to get back in. Right now, I'd love to see a pullback to about 98. Okay. Hope that helps. C wants to look at work. Well, Slack is the one that I got stopped out when Slack broke down below 30. This day right here. It's trying to climb back into the old trading range box. The bottom of this box is going to act as a little bit of resistance. But we really probably don't want to go long until we get above 35 or get some sort of maybe inside the box. Whoops, I don't want to do that. I didn't grab it. Now I'll grab it. Maybe something like that inside the box. Now, that one, here's one other thing I'm going to point out that you may or may not be interested in. I don't know that I put a whole lot of emphasis on it, but balance of power on work has been negative for this entire time. That means that the big institutions are basically not buying it actively. In fact, they're actively unloading it. I don't know. I took the trade back here when it started to move up, but it crapped out on me. And maybe there's something to it. Maybe there isn't. I've never been able to get balance of power to help me out consistently, but I do have it on there because a couple of people I work with like balance of power. Okay. JP, what is your rules on option spread amount? Well, the options guru in our family here is Doug Campbell, and I go by his rules. I had the same rules that he does, but before we even met, is I like to see about 1/3 of the difference. So if you have, let's get it here. Let's say you have a spread on an option, and I'm just going to pick out some numbers. Don't look at the chart here. If you had $40 option and a $37.50 option, this is $2. Let's not do that. I don't want to make the math too hard for myself. We had a 40 and a 35. It's a $5 option. Okay, $5 spread. I'm going to want $1.50 to take in, or if I'm going to do a credit spread, or is that what you're talking about, JP? The rules on the option spread amount, meaning credit. So you would have, say, one's down here, $5 spread. You want $1.50 to take in. Is that what you're thinking about? If so, it's 0.33, about 1/3. So for every dollar, you want 33 cents. And I'll assume that that's what you were asking. Bid-ask spread. Okay, I got over there and looked at it. You'll have to decide. Let me find us where we're at. Find it back. Okay. Where was I? Bid-ask spread. You'll have to decide what too much is for you. I normally like 30 cents or less. But again, if you have stocks that are in high option volumes, and for those who are members, we posted for you the CBOE data. I have 386 of the top monthly options trading stocks listed here. If they're not on that 386 list, I probably don't see it. And so therefore, if we were looking for, it's kind of hard for me. I can't bring over my live charts because it's got all of my account data showing. Let's see, maybe I can sanitize it. Yeah, okay, hold on. Okay, there we go. All right, let's look at something like Nike. Analyze. There's 20 cents. But you have to look at the stocks. Let's start going up a little. Nike, high volume trader. All of these are pretty darn close, right? Work. Yeah, they're pretty darn close as well. Okay, where I'd be trading. Some of them are starting to get to, say, 30 cents or so. Again, that was at the end of the day. They may be tighter during regular trading hours. Let's try a stock that isn't necessarily one you want to be trading. But Genworth, $3 stock. You're going to be paying on the short side, you're going to have about 25-30 cent spread. That's way, way, way too much. Yeah, Chris, the liquidity is paramount, getting in and out. And if it's 20 or 30 cents or anything more than that, you're going to potentially have to give up 30 cents of that. You won't probably, if it's going against you and you're having to get out, you may not be able to get the midpoint. You may have to give it all the way to the bid if you're trying to get out of a trade. So personally, I will go for about 30 cents max, absolutely tops. And I got to be really interested in that trade to do that one. Whoops, I grabbed the wrong chart. There. Okay. Lost audio. Have you lost audio? Nobody's speaking. Shit. Hello, hello? Can you hear me now? Am I back? It didn't like the fact that I was moving. I've lost my place, so I'm going to have to just pick up from here. I wouldn't get into here because of the earnings. It's up here. It's not giving me any vibes, long or short here. I don't see an advantage here, especially with earnings being on the 6th. Reggie, can you help me with putting... Well, don't use RSI. Okay. Reggie, if you're here, go to studies. You can add the study. You've already got it added. Edit study. Stochastics RSI, not RSI. So make sure you have Stoch RSI. And then you can put in your overbought and oversold levels up here. Full K RSI length 7. I leave 8 and 20 there. That's fine. I like to use Wilders, but it doesn't really make any difference. I will use the RSI close price. And there's percent K7 period D period 3, slowing period 3. They don't use, okay, there's 7, 7, 3, 3. So they use them, but they're not the same layout as TC 2000. 7, 7, 3, 3. Simple, and I don't use breakout signals. Hope that helps. Mind if we analyze Uber earning coming this Thursday? Well, let's take a look. I am going to do not add any more stocks below that. Uber Scooper. Let's get out of there. Let's go back to TC 2000. All right. Uber has been in a big trading range here, and that it reports earnings this Thursday. I see no reason to get in beforehand. And after the fact, I'm going to be looking for some sort of movement that takes me above 35 or movement that takes me below 30. It's as simple as that. You'll have to figure out where it's trading after it reports earnings and then decides whether it's heading for 27 or heading for 38 to 40. Marvell. What does this tell you on Marvell? It's the EMA only chart. Tells me that we were in a really good uptrend, leveled off for about 2 weeks, then a good uptrend, level off, little bit of an uptrend, and then level off. And that's what we're seeing here. And it makes it easier for us to see that up, sideways, up, sideways, up, and then we're just kind of wallowing around now. I don't see any tradable advantage at Marvell at the moment. Maybe, just maybe, if we got above that level there, might tell me we're going back up to the $39 level, but I don't know. Right now, I don't see a trade. The other problem is, the one that's just jumping out at me now, that was the prior low. We've made a lower low. Lower high, lower low. We need to make higher highs, higher lows, and then we'll change the direction. Right now, we're doing it the opposite. If there's just one simple thing you can look at is, look at the swing levels. All right. There's the high. There's the low. Higher high. Higher low. Lower high. Equal low. Okay. It's trying to decide where to go. Higher highs all the way up to here. Higher low. Lower high. Lower low. And maybe a lower high again. Don't know. If you stay on that right side of those highs and lows, with uptrend is higher highs and higher lows, downtrend lower highs and lower lows, that'll keep you on the right side of the trade most of the time. Chris says 165 on a $3 spread. Okay, a $5 spread, I meant. Lost audio. Alright, I've got to go back up here. I've missed a whole bunch. Okay. All right, Cynthia asked, see, where do you say your videos are posted on Gap Subs could be found? Okay. Cynthia. There's the link to the videos of my Top Gun Trading channel. And go over here under the search bar, and then you can basically type up gaps. Type in gaps. And there's all kinds of presentations on gaps, because I love gaps. All right. You're welcome. Let's go back up again. Thanks, Ed. You've already answered that, I guess. All right. Well, it looks like I've answered everybody's questions. We're on Marvell is bouncing off the 50 with a bullish engulf and a doji. Okay. Be careful about using moving averages for an idea of support or resistance. Moving averages are good for people to judge a trend. They're like training wheels. But in fact, the stock did not bounce off of the 50 period moving average. It bounced off of price levels around the $35 level. And let's find out where those were. It's always price-based. Well, one of them was right here. And it basically showed that right there, sellers did not want to let it go below 35. Now, all of these people over here got in, and then it got up. And what does the stochastic RSI tell us? It basically bottomed out at 35, and it did a double bottom. It's going higher. It doesn't look bullish to me because it's got overhead resistance. You see the little dots here, the red dots? Doug Campbell, he uses a rule of thumb that if I have a red dot above, it says you can't trade it long. The only way you can do is trade short. If you have a green dot below, you're okay to go long, but you can't go short. Now, those are a gross rule of thumb. They tend to work most of the time, but I'm looking at the totality here, not just the last 3 or 4 candles. Bob, we ran into resistance right here around 37.50 and couldn't get back above it. We got up to it once at 39, but we could not for the last 3 weeks get over 37.5. At least 3 times we tried to do that. Let me go back to the EMA only chart. You tell me this looked bullish and that looked bullish, but you tell me, does that look bullish now? Maybe if you look, you're counting on a curl back up, and maybe it will work, but I want higher odds than maybe. Just saying. That you could be right. I could be totally wrong, but I'm just doing the odds. And I want more than 50-50 crapshoot odds. And that's kind of what I see. All right, any other questions before we hang up for the night? We've been going for an hour and a half. I appreciate everybody sticking around. And remember, if you're interested in the LTA scanner, it's over there every day between while the markets are open, and on Wednesday it goes over kind of a little freebie training class and answers any questions you might have there. And if you're interested in signing up for the 60-day offer, It's still good. You're welcome, Debo. All right. Give me an opportunity to post this up to, I have to render it and then post it up. It'll probably take me an hour and a half to do that. All right, you guys take care. We'll see you next week. Ta-ta.